beginning balance, add all the receipts and subtract all the payments. And at the end, if the answer is positive, it means available for investment. If answer is negative, then we say that, okay, we need new financing. Okay. So how we are going to start it? Number one, cash balance at the beginning. If you pay close attention here. So this is for the year ended 31 2014, and this cash balance is 31st December 2013. All right. So cash budget is prepared in advance or prepared for the future, so that we know that it can be made for for weekly, monthly, quarterly, semi-annually, for 6 months, right? And for a year as well. So this example is for a year. So for the next year, how much we would be needing loan, or if the answer is positive, whether we have extra cash to invest, all right, to make investment decisions, to expand our business, this kind of stuff. So remember, this cash budget only includes cash things. It means we don't include any depreciation, which is non-cash. We don't include any, increase in goodwill, which is intangible assets, which we don't have to pay anything. All right. So we start from the beginning balance. Beginning balance is 6260. And remember, all the cash receipts that we will be receiving from our inside the company. So these are all the inflows, cash inflow. Cash inflow, which means cash is coming into the business. So how cash is coming? Number one, from cash sales, or when customer pays us their amount. The collection from the customer, dividend on investments that we purchase other company shares and we receive dividend. So this is not the dividend that we pay. If we pay, then that is payment. That would be under payments. So here it is the dividend revenue, you can say that, or return on investment as a dividend. And then sale of fixed assets, or any assets that we sell, like store fixtures, like water cooler, ACs, all these fixtures. So our total inflow is 69150. And our payments, number one payment is payment to our supplier for inventories, right? Operating expenses include utility expenses, salaries, electricity, all the expenses, water charges, like that. Expansion of store, this is also payment. Payment means outflow. Cash is going out from the business, and specifically I should write cash, not all the outflow, cash outflow. Payment of long-term debt, payment of interest as well, right? Dividend payment. So we pay to our owners the dividend, so that's why it is a payment. So all the inflow minus all the outflow. So answer is 3900 positive. All right. And you said, and the business said, we need to have at least at the start of the 2000, at the end of the 2014, how much we have? We must have 5,000. So it means during this activities, how much we gonna have? 3,900. And how much we need to apply for loan? $1,100. All right. So this one is given to you. This one, that how much you want that you start your year with, how much cash. So they said at least you must have 5,000. So you have 3,900 as well. And how much further you need? You need 1,100. So basically, start from the beginning cash balance, add all the inflows minus all the outflows, and you need to take care if there is any condition is there. Okay, you need to start the next year going to be at least 5,000. So you are just there. So we are going to have this illustration here. So we have Kachina Corporation, which is preparing its cash budget for 2015. right? Okay, let me see. Okay, so the Kachina ended 2014 with a cash balance of 68 million. So we are preparing for 2015. So that would be our beginning cash balance. Okay. And the managers need to keep a cash balance at least 70 years for the operations. It means you must have 70 million, cash. Okay. Now the inflows are, these are the inflows. Will be marking the inflows with green. So cash collection from customer, these are 11,925 million. And remember, pay very close attention. You are making 2015 cash flow. This must be collected in 2015 as well. Because sometimes the author or the teacher or instructor gonna test you here by writing down 2014 and 2015 as well. So you need to be very careful which year you are making the cash budget and this collection is for which year. And the payments for inventory, payments would be, I would be marking payment with the black one. Okay, so Kachina expects to receive interest. When receive interest, it means that is your inflow. Receive interest. 15 million, sorry, 15 million. And operating expenses are Kachina expect to invest 1922 in a new equipment. When they purchase new equipment, this is cash outflow, cash going out, new equipment coming to the business. So debt payments 683. The company forecasts net income and plans to pay dividends. So dividend is a payment. So remember, profit is not cash. We don't write net income in our cash budget. All right. Remember, net income is not backed by cash because net income does include some kind of non-cash expenses like depreciation and other stuff, amortization. So we are not going to include net income in our cash budget. So prepare Kachina Corporation cash budget for 2015. So remember, you need to find out 2015 cash balance. Will the budgeted level of cash received leaves Kachina with the desired ending balance of 70 million or not? Or do we need additional financing? So let's start with, first of all, let me change the color of the pencil here. Here we go. So we have Kachina Corporation cash budget for 2015. Our beginning cash balance 68. Cash collection, we have 2 cash collections. So our total cash collection going to be total cash inflows. Write it down. Total inflows 12,008 million. And write down all the payments. Purchase of inventory, operating expense, investment, debt, dividends. You don't see any net income here. Right? So this is total outflow. So inflow after outflow 92. So that is meet our requirement for having 70 million. Yes, we do have. And how much extra we have? 22 million. So that 22 million we can use it for investment, for business expansion, for giving loans to our employees, for house construction and other whatsoever. All right. So my question or many of the student questions would be that this would be given to you that for planning of 2000 at the end of 2015 we must have a cash balance 70 million. So it means extra cash do we have here? Yes, 22 million. So this 22 million you can invest in expansion of the business, purchasing new products or whatsoever you want to do with this cash. So only you can play with this cash of 22 million extra cash. Why? Because this 70 million, you said you must maintain 70 million The company desired that you must have 70 million at the end of 2015. That's it. Any question, Oliver? Momo, Venetia, Taramina,
No questions, sir.
No.
Joao Paulo, Priscillo, Marco, PD, Miria. All right?
No questions, sir.
Good. So if there is no question, then okay. Let's take a group activity here. So you need to construct a cash balance, budgeted cash for the Tom Preston, Gateway Gulf Corporation. Okay? So take a picture and let me establish breakout room again. So those who are watching online, please pause the video. And I'm going to be pausing as well. And I'm going to be resuming the recording after we're done with our breakout room activity. Okay, class, welcome back after the breakout room activity. So we just finished the group activity. So let me read the question and then we will see its solution. So we have a question from your book. So Tom Patterson, the Chief Financial Officer, is responsible for Gateway Golf cash budget for 2015. The budget will help Preston determine the amount of long-term borrowings needed at the end of the year. With a cash balance of 135,000, the Patterson's assistant have assembled budget data for 2015, which the computer printed in alphabetically order. Not all the data items reproduced below are in preparing the budget. So this is all the information, and they are saying that not necessarily all the information are